their AI, data, and modernization programs. We saw a clear trend of many AI projects moving to scale and production. So we quickly aligned with these priorities, deepened our partnerships, and of course secured key deals. The large deals we closed this quarter, and of course the last quarter, along with a strong pipeline, put us in a good position for the second half of the year. With that, let me now turn to our Q1 performance. I'll start with key financial highlights and an overview of our markets and sectors. I will request Aparna to provide further details on the financials in her remarks. Our IT services revenue for Q1 was $2.59 billion, which is degrowth of 2% in constant currency terms within our guidance range. Our IT services margin was 17.3%, an expansion of 80 basis points year on year. In our markets, Americas grew 1.5% year on year in constant terms, and we are seeing strong deal momentum in Americas. APMEA revenue stayed flat. However, digital spending in India, Middle East, and Southeast Asia kept this market resilient for us. Europe continued to face headwinds, and clients remained focused on maintaining their competitiveness in this environment. Finally, Capco grew year on year, driven by strong performance in Latin America. Now turning to our industry sectors. In fact, in BFSI, demand is strong and steady. Clients are modernizing their IT landscape with a sharp focus on AI-led efficiency and transformation. In fact, we won 2 mega deals here, which I will discuss later. In consumer and EMR, we are seeing a more cautious mode. Retail, CPG, and manufacturing in these sectors have been most affected by tariffs. Even though discretionary budgets are tight, outsourcing renewals are creating new opportunities for us to gain wallet share. In technology and communications, we are seeing a clear shift towards AI investments. In fact, clients are looking to innovate and future-proof their software and platforms. We won a large deal here, and in fact, that has the potential to become a mega deal. Healthcare for us continues to do well as clients invest in modernization and digital transformation. While payers are under cost pressure, the overall outlook for the sector remains positive. These priorities and shifts in client focus are evident in the strategic deals we have won in Q1. Let me talk about that. During this quarter, we reported bookings worth $5 billion in total contract value, a growth of 51% year on year. Our large deal bookings reached $2.7 billion, up 131% year on year. This includes 16 large deals this quarter, including the 2 mega deals I talked about. Several of these wins, I want to repeat, several of these wins were driven by vendor consolidation, where we continue to build strong momentum. These deals reflect a good balance of extension of work and securing new business. They also highlight our capabilities, our domain expertise, and the progress we have made in AI. Let me share 3 examples to bring this to life. All 3 are, 2 of them are mega deals, and 1 of them is potential mega deal. My first example is a global banking leader that selected us as their strategic partner to transform technology across multiple business lines and enterprise functions. They chose Wipro for our deep BFSI expertise and consulting-led approach. We will help transform their digital ecosystem, modernize their cloud and data platforms, and improve cyber resilience and also embed AI across their software development lifecycle to boost engineering productivity and also reimagine core processes. Next, a leading global semiconductor company signed a multi-year agreement with us to modernize its entire product lifecycle. Building on our long-standing partnership, we will drive end-to-end engineering transformation from silicon design and system software to platform development and hardware validation. Our focus is on using AI and automation to accelerate development, improve quality, reduce costs, and enable agile practices. The third one, we secured a mega deal with a leading North American bank, extending a decade-long partnership. We will transform their technology across core banking, wealth management, and retail, using our AI-powered global delivery framework. In fact, this includes modernizing their cloud infrastructure, strengthening cyber resilience, and digital ecosystems and enterprise applications. For our client, this will accelerate innovation, improve time to market, and deliver a customer-centric experience. If you notice, these examples highlight a clear trend. AI is no longer a niche. It's becoming essential to how businesses operate at scale. At Wipro, we see AI as a force reshaping industries and amplifying human potential. We are, in fact, building an AI-first, AI everywhere enterprise focused on solving complex challenges, accelerating delivery, and reimagining operations at scale. By embracing autonomous and agentic AI, we are transforming business models and how organizations work. Our AI capabilities are integrated into both industry and cross-industry solutions. So by combining domain expertise with AI, we are able to deliver value through solutions such as hyper-personalized wealth management for our BFSI clients, predictive industrial insights for our manufacturing clients. So far, we have deployed over 200 AI-powered agents using advanced technologies from our leading hyperscalers, who are big partners. Just to give an example, these agents enable smarter lending, intelligent claims processing, and autonomous network management. I talked about teams and talent. We are equally focused on talent and training our teams with the skills and mindset to thrive in an AI-first world. Building on this strong foundation and with our continued focus on 5 strategic priorities, we are well positioned for the future. I'd like to now discuss our outlook for the next quarter. While we are cautious given the macro environment, our strong order book, healthy pipeline, and focus on AI-powered, consulting-led solutions give us confidence in delivering long-term value to our clients. Returning to profitable growth remains our priority. Based on our visibility, we are guiding for a sequential growth of -1.0% to +1.0% in constant currency terms. With that, let me hand over to Aparna for a detailed view on our financials. Thank you, and over to you, Aparna.
Thank you, Srini. Good evening, ladies and gentlemen. Let me give you a brief update on the financial performance for the quarter ended 30th June 2025 before we move on to the Q&A session. Our IT services revenue for quarter one sequentially declined by 2% in constant currency terms, which is within our guidance range. On a year-on-year basis, the revenues declined by 2.3% in constant currency terms. Our operating margins for quarter one was at 17.3%. This is an expansion of 80 basis points on a year-on-year basis. As Srini shared, many of our large deal wins are in the nature of cost takeout or vendor consolidation. These deals require upfront investments and come with their fair share of pressures on costs. As always, we will continue to focus on operational excellence in order to offset these pressures. Let me give you some color on the performance of our strategic market units and sectors. All numbers that I will share will be on constant currency basis. Americas 1 grew 0.2% sequentially and grew 5.8% on a year-on-year basis. Americas 2 degrew 1.7% sequentially and 2.7% on a year-on-year basis. Europe declined 6.4% sequentially and 11.6% on a year-on-year basis. APMEA has grown 0.6% sequentially and has declined 0.1% on a year-on-year basis. Moving on to sector performance, BFSI declined 3.8% sequentially and 3.5% year-on-year. Healthcare grew 0.5% sequentially and 3.5% on a year-on-year basis. Consumer declined 4% sequentially and 5%.
All right, that was Wipro management detailing the plans ahead for the quarters coming in, and commentary seems to be bullish as far as H2 is concerned on the back of the deal wins.